Well, Google's multi-billion-dollar bid to acquire coupon site Groupon ended Friday as the two sides broke off talks. With more on the deal that never happened, we're joined by Andrew Zalasin. He's the CFO for RRE Ventures, a venture capital firm specializing in technology. Andy, good to see you.
Good morning.
So what do you think is going through Andrew Mason's mind?
Well, you know, we back early-stage technology entrepreneurs. And
like him.
Like him. And he's the kind of person that we want to back, somebody who has the big vision, who wants to make something huge, something big, and something sustainable, a standalone company. In fact, I'm not sure we would back somebody whose idea is in a few years we're just going to sell to Google or sell to Microsoft.
Well, you never want anybody whose end strategy is that, right?
Absolutely.
So then, do you think he made a mistake?
Well, I don't believe this is necessarily a mistake. As a venture investor, when you have an opportunity to exit a company that's only 2 years old with a $6 billion number, you know, that is something that is incredibly enticing. However, I can understand where he would be coming from, which again is an entrepreneur who doesn't want to be part of a bigger company but wants to build his own big company, an independent company, a sustainable company, and has a great big vision. So I do understand where he's coming from.
But you can't possibly see Groupon as an independent company in 10 years. You can't possibly see that, Andrew.
It's not in its existing form, no. But with an entrepreneur like Mason, he can extend that brand, extend the opportunities into different areas as the company grows and evolves.
Okay.
So if he is the person at the helm who has the intelligence and real drive to do that, and I understand that is his personality and he has his employees who really truly believe in him,
right,
then he is the leader who potentially could do that.
And you think he made this decision? Not the investors, but him?
From what I've seen and what I've heard, it appears there was a bit of a dichotomy amongst the board members, and that he, in fact, was the person who did drive the decision.
Who made that final decision.
Yes.
But do you think at some point they might come back and say, or you know, either Google or whoever might come back and say, look, we'll pay you more money, and that'll seal the deal?
I don't think this story has been written yet. I think there is an opportunity. Some people have said that maybe this is just an attempt for them to get a higher price or to bring other bidders into the fold. And that may be true. At a minimum, what they've done is set a bar for what a valuation is in the event that they have to raise more capital.
Well, is there anybody out there besides Google who actually would fit well with Groupon?
Well, I think you're seeing the Yahoos of the world and the Microsofts and others. Those are folks who are the natural other bidders for a property such as Groupon, yes.
Such as Groupon. Now, you must in your business get a lot of pitches, right? How much would you say, I mean, if you can try to put a percentage on it, how much do you say would you get in this area of social networking, of mobile apps?
Well, I think we're seeing more these days. In fact, probably in the last month, we've seen 3 or 4 new deals in this way. We do have a company.
Pitches or deals? You're actually making deals or pitches?
No, we've seen pitches, yes.
Okay, okay.
So we see business plans come in from all over the country with entrepreneurs who are looking at this market. In fact, we backed one about a year and about 2 months ago called Tipper, which actually looked at group buying, identified the local publishers, the local newspapers and local blogs as a very fertile ground to attack and to add value to that sort of that market.
But you see, then Andy, then doesn't that tell you that there's a very low barrier to entry and therefore there are some problems down the road?
Well, there may be a low barrier to entry. Remember that Groupon is less about technology than it is about the people. And in fact, they have 35 million subscribers. They have 3,000 employees, and they have their property in 300 cities.
Okay.
A company like Tipper is more of a technology platform. So it's doing something in a different way, and it's targeting a market that they think is deeper and richer. At the end of the day, though, you have a Groupon who is huge.
But I don't understand that. But I mean, but it's technology. I mean, but I don't get that. So Groupon, though, you're saying is more about people. But then
yes.
Something like, what you bought is also a coupon site, though, essentially,
well,
right?
Well, it is. And so in the case of Groupon, what you have is you have a company who has a large sales force. I think there's 1,600 salespeople within Groupon. And they go out to the local merchants and the folks that provide services, and they try to sell the opportunity to do deals with
Okay, so they make those
Groupon.
relationships. Okay.
Exactly.
So then tell me about then, how does Tipper differ then?
Well, what Tipper does is it goes to the local blogs and newspapers and the folks that are online in local places, and it sells a technology platform. So it helps them develop a website so that their existing subscribers and readers who are there are offered opportunities to do group buying.
Oh, okay,
and so,
I see.
And it gives people a reason to come back to those local blogs and local newspapers, so the local publishers actually benefit, and the advertisers who may not be advertising specifically for group buys are there and are seeing that traffic flow.
Andy, thank you. Appreciate it.
Thank you.
Always learn something new here with you. Andy Zalasin of RRE Ventures.